Guys, everybody thinks in the Toronto-based media that Windsor is dying in this trade war or something. Then tell me this: do we keep building like a city that's exploding? Look at this thing behind me. This is just today. I was shooting videos today, anyways. Look, it's just today. Quadruple the power for this area in the next 10 years. And I'm going to explain how, as a real estate investor, you can take advantage. And I hate to say this, but the media is misleading you on Windsor, Ontario. Take advantage of that. I'm going to show you how. I'm Reece Trenier from the Vanguard team at Manor Realty. We've spent over 20 years as a real estate team making you guys wealthy. 90% of our investors are from out of town, so don't think it's some special thing. We can help you. Guys, it's driving me nuts because I keep seeing these announcements and these news stories locally, and then I see what you guys are reading in the national media that we have the highest unemployment rate in Canada. Okay, maybe, but we added 1,600 high skilled jobs last month. We've gone from 147,000 people working in Windsor in 2021 to 229,000 today. And that number's still going up. So I guess we have the highest unemployment rate because you keep saying that in the paper. But isn't that because people keep moving down here and moving from other countries looking for work? Because we have the work and our number of people working keeps exploding. It drives me nuts. So I wanted to start off with this today. I'm actually getting into a monthly market update for you guys, but I thought, you know what? This is just another announcement today that we need 4 times as much, 400% more power for this area with all the factories we're getting. And if you notice in this article, you can't see it here, but if you look it up, Windsor Star, and you read this article, you're going to see that one of the 3 main categories that's driving predicted electricity growth is residential housing, right? And right now, we don't have enough residential housing. I'm going to get into it with you guys right now. We actually built half as many houses this year, or housing units this year, than we did in 2024, which in the middle of a housing crisis, not good. Not good. But for an investor, guess what? That creates opportunity. Guys, I am the team leader of the Vanguard team in Windsor, Ontario. Again, 70% of our business is taking care of the out-of-town investor and making them wealthy through real estate. I have a team of 7 or 8 real estate agents. I sound like a bird that can't count the eggs in its nest, but they all have specific real estate investment niches, and it's gone really well for a long time. So hop on board if you haven't already. This is our YouTube channel. Subscribe, and again, you can see here we are the Windsor-Essex Real Estate YouTube channel. And we'll continue to bring you the information that we can. So here's your monthly market update for October going into November. You can see that listings are way up, which is great for you guys. It creates more opportunities and gives more options to invest in with less competition per listing. Median sales price. I think, again, this is great. It's gone from 540,000 to 515,000. This means, on the average, we're basically that much closer to more cash flowing properties being available for sale, like in the good old days. Any income property used to buy in Windsor 10 years ago was all cash flowing. Now you have to be more selective, but they're still commonly available. All right. As far as days on market, months of inventory, this leans into the favor of the buyer investor. If you're looking to sell your fourplex, hang tight as much as you can. And we can tell you when it's time to start selling again if you're trying to maximize. But if you're trying to move your money into other real estate, then, whenever, right? So here we go here. Sales in October. The dark gray is 2024. The light gray is 2025. And what you can see month over month is we actually had a nice jump back up in October. September really started looking anemic. I'm like, here we go. And then look at that. It came right back to year over year being very, very close. Which is good. You don't want sales to drop too much. But for you guys, the sales are still pretty tame, again, which opens up opportunities to invest. So if you're looking to jump up the bigger properties by selling your smaller properties, or you're just starting out, now it's a good time to do either one of those. What you'll find here, I don't like average price as much as median. Median is much more, here's median here, right? Median's much more accurate. It's basically if 100 houses sold this month, what did the 50th house sell for, right? My problem with averages is it only takes one or two people to buy, a $20 million mansion, and these numbers all get skewed, right? So, but you can see basically it's a straight line. And it has been a straight line for about 2.5 years now, where prices really haven't gone up and prices really haven't gone down. And we call this a breather. So the market went crazy. The economy down here is still robust. So the prices didn't go down. You still have a housing crisis, which means you have a shortage of housing. So the prices didn't go down. They were propped up by getting inflation under control, reducing interest rates, so mortgage rates are cheaper to acquire, and the economy stayed strong. So this is why you're not seeing the prices go down too much right now. And this is a breather. They're going to start going up again. Probably once this trade war has been largely resolved. As far as the units being sold, I want you guys to be aware of this cliff right here. If you can see my mouse, look at that, right? So all the sales in Windsor are between basically $300,000 and $700,000, right? If you've got a cheaper place, great. I think this tail here is more because there's just not that many. But look at this. As soon as you go over 700,000, look at that graveyard. It's barely any sales. It's crazy. It just drops, right? So you can see where the action is here, right? So if you're looking to build a portfolio of smaller income properties right now, like let's say you do a house plus an ADU, then you want to buy something in that, that $300,000, $400,000 range here, fix it up and eventually resell it to buy bigger real estate investments when you can sell in this range where all the sales are. Does that make sense? So if you're buying here and adding your ADUs here or fixing up your duplexes here, and then later on, a few years later, you're selling in this range, right? That's where all your buyers are. So that's where you want to be, right? That's why we look at this data, guys. Okay? So, guys, now I'm going to get into the monthly market update. I am Reese Trenier with the Vanguard team at Manor Realty, and that's our YouTube channel down there. Make sure you subscribe. We also have a very robust Facebook investment group. The link is also below. And you go, oh, what's the big deal, man? Well, hey, I got to put the exclusive and in-pocket listing somewhere for our clients. Can't just mass email them out. So we put them into the Facebook channel as well. All right. So very important to be a part of that if you're serious about investing in Windsor, Ontario. Guys, market update for October going into November. You can see that the number of new listings really jumped up, which is great news for you guys if you're buying, right? Because you have fewer competitors per quality listing to buy that's cash flowing or that you can make cash flow with renovations. You can see here as well, the median sales price, it goes up and down, but it's basically a flat line right now in that sort of, that $510,000 to $540,000 range. And it's been like that for 2.5 years, right? And a lot of this, no change, no change. I'll show you on the graph. Look at that, right? It's been like that for 2.5 years, just a flat line. And if you look at averages, same thing. Look, it's flat line. It's been like that for about 2.5 years. What you're looking at is what you call a breather, right? So property values went up very rapidly in Windsor for a variety of reasons, both local and global in nature. And then you flatline. So what's happening is, even though it's a trade war, which you would think would bring property values down, your interest rates are also down. So you have very healthy mortgage rates. And then whether you like it or not, we're still in a housing crisis. We still don't have enough housing. So supply and demand also keeps it level. So the negatives balance out the positives right now. But as soon as you take those negatives away, like the uncertainty of the market based on the trade war with America and that sort of thing, you take that stuff away, guess what happens to your housing prices, right? They start taking off again pretty rapidly. So this is what you call a breather. I really want you to pay attention to this cliff right here. So what you're looking at is how many units were sold in October per sort of price range, right? And what you'll find is after $700,000, it's like a cliff. Like, look at that. Boom. It's a graveyard after 700 grand. So what you ideally want to do is you want to buy in this range. I'm talking about if you're buying smaller properties, like a house where you add an additional dwelling unit or a duplex. You want to buy them sort of in that 300 to maybe $400,000 range, right down in here. And when you fix them up, and then when you increase those rents or just add that additional dwelling unit, you're now able to sell it in this range where all the buyers are. Does that make sense? So you want to buy down here, in these price ranges, fix the place up, and then obviously hold on to them if you can. But if you have to sell some of them because you have to continue to make your equity free to buy the next one, you want to resell in this area where all the buyers are, right? This is why we look at the data, guys. This is why we do it, so that we understand these things. Median price comparison. So I like showing this simply. If you look at Windsor and you look at Toronto, the prices are half, right? They're 50% for a house. Now, juxtapose that with this, right? These are the median household incomes. So basically, husband, wife, right? So the median incomes, and bear in mind, this was 2020. We don't have the census data yet for 2025. Windsor's gone up, right? We've added a ton of skilled labor jobs. I can guarantee we are way up from this number here, 73 grand. But of the major cities in Canada, we're sixth 5 years ago. Now, what did I tell you? Right? This is 2020 data. 2021, we had 147,000 people working here. 2025, we've got 229,000 people working here. And they're not coming down for unskilled line worker jobs or to flip burgers at McDonald's. They're coming down with skills and trades that we badly need to run the economic fourth industrial revolution explosion that we're experiencing in Windsor right now, right? But check this out. So even if it's still 73 grand and even if it's still 85 grand in Toronto, remember, our housing is half as cheap. What's the most expensive thing you're ever going to buy? Your house, right? So our cost of living is way lower than Toronto, right? So, and to all the haters, please understand that we live right next to Detroit. We have more amenities than any Canadians in Canada. You can't compete. I love Toronto, but you can't compete with the amenities that Detroit has. So quality of life down here is spectacular if you're looking to move where your investments are. We've had many clients do that as they've gotten used to Windsor. But the main thing I'm pointing out is that because you have median family incomes that are high, we're sixth in Canada, but our housing prices are low, right? Which means our rents are lower as well, right? Comparatively. So as you buy these properties and as the economy continues to ramp up, as the trade wars go away, right? What's going to happen is your property values have a lot of room to move up because we are that low, right? Like we're making almost as much as the average, the median Torontonian, yet our housing prices are half, right? So there's a lot of room for housing price to go up and there's a lot of room for rents to go up. Because if they can handle it in Toronto, we can handle it down here because you can see with the median incomes, they're pretty darn close. Okay? I hope that made sense. Basically, there's room for expansion on price and on rents and profit if you're buying today. If you wait until the trade war's done and you wait until the bridge is running, the bridge is finished. We're waiting on the Americans to build a couple of buildings, for the border guards. The bridge is done. The mega hospital is going to start building in the next year. Highway 3, they're doubling. Freeway connections all over the place. Exits all over the place. They're building big city infrastructure into Windsor because they're forced to, because they're looking at the predictive models. I just showed you guys the article today. The independently run energy board, the IESO of Ontario, firmly believes that our economy is going to grow so much that our demands for electricity just in 10 short years is going to quadruple. And guys, you have to understand, we're not a farming community all of a sudden switching to industrial because that would make sense. Why all of a sudden you'd have an explosion in electricity demand? We're already per capita the place in Canada for heavy industry, right? And that sucks up a lot of electricity. So if you're talking about quadrupling a city that's already a heavy industrial city, guess what, guys? We're exploding down here. We are exploding. So understand that this is going to keep going up and this is going to keep coming up because there are not enough. I think you might know from my other videos, like I'm one of the people creating lots of residential density into Windsor, and it's a drop in the bucket. We can't keep up, right? I focus on downtown Windsor. We're building over about 150 apartments right now, with hopefully another 600 coming up. So I walk a lot of this walk. So again, I kind of started with this, and then that article came out about quadrupling our power down here the next 10 years. But yeah, this is what the media is telling you guys. And when I say the media, it's the Toronto-based media. So there's a pre-ingrained bias against Windsor that literally goes back to Prohibition 100 years ago. So this is nothing new to us, but it gets comical when you read that we have the highest unemployment rate. We're the battlefront of the U.S. trade war. But developments are on hold. No, they're not. Impact of tariffs even higher than report. Boom! And don't feel bad that you didn't know we were growing, because even the bankers on Bay Street are reading these headlines and they're hesitant on Windsor. Other lenders aren't, but certain lenders are because they believe this crap. Here's some of the realities, guys. We just added 2 more Taiwanese plants. 11, just in the one plant, another 1,149 jobs. And bear in mind that's a tier 2 plant. So that means you'll have multiple tier 1 plants that have to open to support that tier 2 plant. This next plant didn't even hit the market, didn't even hit the news, rather. Mint is also joint venturing with a Japanese company to do a second plant of over 1,000 workers. Only reason I know that is I happen to be talking to one of the Invest Windsor-Essex guys. And I'm like, what are you talking about? Yeah, another plant, ho hum. Yeah, we're not even going to announce it. Like, whatever. And they're already building it. I drove out there. It's crazy, man. Now this is already outdated. It says number 2 says 9,300 new jobs created in 2025. That wasn't including October. So now it's 10,800. 10,900 new jobs in 2025. But we got the highest unemployment rate, guys. Yeah. Yeah, I guess we do, because people are coming down here to look for work, right? So yeah, 227,000 people are now employed. Back in 2021, it was 147,000. But we have the highest unemployment rates. Right? Like, get out of here, as the Italians would say. Get out of here. Yeah, so 1,600 more full-time jobs last month. I showed you guys the article that we just quadrupled electricity. We need quadruple the electricity down here in the next 10 years. And the $7 billion bridge is now done. We're just waiting on the Americans to create a couple outbuildings. The battery plant just got its occupancy permits 2 weeks ago. They're now punching out. It's the largest battery plant in North America. You can literally take the entire United States battery manufacturing capacity and fit it into the plant in Windsor. And that's including Elon Musk and Tesla. That's how big that plant is. And it's kind of funny because in the news they were saying, oh, the battery plant's pivoting to building batteries for storage capacity for, basically we're having so many solar panels coming online now. Well, you got to be able to store that electricity you're making during the day to distribute into our houses at night, right? So that requires a battery storage in warehouses. Now, I knew that was coming because I subscribed to The Economist magazine. And The Economist magazine talks about the next trillion-dollar industry in green tech being these storage facilities. So I knew LG and Stellantis weren't going to just do car batteries at the Windsor plant, the Windsor battery plant. They were also going to do these storage facilities. But again, the media screws it up. They go, oh, the battery plant is pivoting to doing these batteries. They're not pivoting. You dummies. That's been the plan since the beginning. Like, tell the story accurately. Pivoting. Oh, because, we're in trouble. We're not building as many car batteries. Like, get lost. Just shut up and just tell us the truth. I know I sound like a right winger. Oh, the mainstream media, this and that. Boy, oh boy, do they get it wrong or do they slant it? Especially when it comes to my city. That's why I'm getting a little bit angry. And I wonder what other cities now that they do it to, man. Just bothers me. Look at all this going on the screen right now. And yet, what do you guys read in the media? Highest unemployment rate. And then we're the battlefront, and the ones taking the biggest beating from the U.S. trade war in there. It's garbage. Garbage. This is what's going on. And this is just a summary. You can tell I was struggling to fit everything on one slide. This is the tip of the iceberg, what I posted here. God, I guess I'm more mad about this than I thought. Stellantis just added a third shift, right? The media will report, and go look at the media. They'll report, oh, the Stellantis added a third shift, another 1,500 jobs. That's great. Yeah, that's great. Okay, so if the Stellantis plant added a third shift, gosh, gee whiz, gee willikers. All the supporting tier 2 plants have to add a third shift because it's all just-in-time delivery here. Gosh gee willikers, I guess that means the tier 1 plants also have to add a third shift. Huh, how many jobs total is that? 1,500? No, it's 15,000. That's how many jobs that third shift at Stellantis is adding to Windsor. And those aren't even hitting our job numbers yet with that 227,000. Just getting tired of it, guys. I'm getting tired of you guys getting hosed on basic information. Hopefully this helps today. Look at the last phrase I've got here. With all this going on and all these jobs happening, all these people moving here, the number of houses getting built in 2025 so far is half as many as 2024. And number in 2024 was not enough. So you can see when you talk about the median family incomes in town, all these high skilled jobs you're bringing to town, like they don't even have the 100,000 square foot research and development facility up and running yet. That's 650 engineers and PhDs. Everybody's making over 140 grand. That's the cheapest, except for maybe the janitors there. But the cheapest engineers are 140 grand a year. The PhDs are going to be over 200. 650 of them. Where are they living? I got no idea, man. We just don't have enough housing, right? And so again, as an investor, this is where it becomes really advantageous to you guys. I'm already at 23 minutes because I went on a bit of a rant. So I really quickly, you can stop your screen to look at these. But yeah, like this is an example of a fourplex in a gentrifying neighborhood, and the cash flow is beautiful. That annual income of over 59,000, that's before you pay your expenses and your mortgage, but that's a cash flowing property and it's being well maintained. All right. And then when you're doing additional dwelling unit acquisitions with us, so you buy a house and you add an ADU and you create your cash flow and your increased property value. This is all BRRRR strategy stuff. And this is the best BRRRR strategy stuff right now down here. But you'll make 30 grand in equity, 40 grand in equity doing these. And then you try to hold on to as many of these as you can because your rents are beautiful, right? Like that's a house with an additional dwelling unit, 42,000 a year in gross, right? That's a fourplex, 59,000. That cash flows. But if you're willing to build the additional dwelling unit with some of our recommended renovation contracting teams that we use ourselves on our own properties, you're looking at really good numbers, man. You're looking at like making anywhere from $1,000 to $2,000 a month in cash flow off a house with a mother-in-law suite. So yeah, guys, these are opportunities. Jason Balsden on our team does these. Sadie Morrow on our team has this one listed. You can look them up at thevanguardteam.com. And that's it. That's all. Thanks for joining me if you got this far today. I'm Reese Treno from the Vanguard team at Manor Realty. I've been talking long enough that this thing turned off. The battery died. There you go. See ya.